The stock market fell in the US and then it followed in Asia. Then we see the repeated calls to buy the dip. Everyone from the 7 share of Amazon investor to Jim Bear Stearns Kramer. Let's be realistic for a moment. Stocks fell not for fun, but because there is a real cause for concern for what's happening between China and the US. It's not about winning or losing in trade negotiations or tariffs. Anyone who is being honest with themselves knows that the trade issues could easily escalate to a full-out confrontation. You came here for the truth, so let me unveil that for you. Obviously, the trade issues are very big in the news right now. I wanted to do another video about this, extending on what had happened. In the previous video, I basically just got into the basics, but I wanted to show you some more in-depth information, so let's get into that right away. Here you can see the sea of red on the right hand side. It seems like the only thing that's in the green is the VIX. And we know specifically that the Federal Reserve has a short position on volatility that has been determined previously. Basically wanted to show you the fact that Asia stocks are down right now. They're worried. Obviously the trade issues going to have an impact on the economy. What's going to happen? Big question mark. So they come down. This could easily reverse in no time at all. Looking at this here, Asia stocks decline as US-China trade issues heat up. They get into the details of that, the 60 billion that they're talking about. What is going to happen with the remainder of this is really the question. And of course, I wanted to bring that to you today and show you exactly what they're talking about. But first, I just wanted to show you a little bit of humor. Get ready to pull the trigger on these stocks. We're almost in oversold territory according to Jim Bear Stearns Kramer. Here they are giving you financial advice, and apparently they're allowed to do so at any given time, always pushing people. If somebody reads this CNBC article and actually goes and purchases these stocks based on what they're seeing here, I really do feel sorry for them, because if you're going to read an article, you have to understand they've been caught over and over again. Forbes comes to mind, that they have actually been paid to write articles that promote certain stocks, tell you why it's a good time to buy. This has been determined time and time again. There are other people who do videos about it, tell you what they're buying, and people buy the stocks based on what other people are buying. My goodness, how in the world have we gotten to this place that people do not understand the ins and outs of this as they buy things? You're putting a lot of money in there. You better know for yourself. You don't take the advice of others. This is crazy. Then if you're going to do that, why not just put your money into a fund? It's so much easier that way. Then you can call the manager when you have a problem, when you have an issue. At least there's somebody there that you can yell at. At least this way you're not going to be able to yell at Jim Bear Stearns. There's no way that this is ever going to make sense to people, but that's what they're into. We'll find out in due time how it all works out. From tequila to TV cameras, here is a list of US goods China is targeting with a 25% tariff. Beijing will increase tariffs on more than 5,000 US products to a high of potentially 25%. So here's the list, 2,500 items here. If you are interested, you can go through this article for yourself to see it. I'm going to show you something else in just a moment, but there's basically everything that is affected here. We're looking at all of the goodies coming out of China. Basically, nothing is left, nothing is spared, and I do believe that this is going to impact the customer. People are senseless. Oh, we can win, we can win. The things that you're buying are going to be more expensive. You're not going to win anything. You don't win, you lose. When they have free trade agreements between two countries, do you gain anything at all? Of course not. There's a free trade agreement in between the US and Canada. However, if I go over the border and I got to buy something, I pay a tax. There's no way that they'd let you off scot-free. It's not for you, it's for the big conglomerates. They are the ones that benefit anytime, and you have to lose. I'm going to show you the other side of the equation in just a second, but before I get too off topic, I wanted to show you this. It gives us an idea of what's happening with the fund flows. Where'd the money go last week? For the 5 trading days through Thursday's close, ETF investors redeemed $8 billion. That compares to a weekly average inflow of $3.5 billion. So that is a significant difference there. Equity funds bore the brunt of the redemptions with 7.6 billion of outflows. Within this, they get into some more detail, but I just wanted to note the fact that we have seen persistent selling, not just in ETFs. Actually, ETFs are where some of the money has been going, but ultimately, when you look at the fund flows from the EPFR, we have watched the money leaving. It is leaving and going into things like mortgage-backed securities, anything where they can get a yield. We're looking at this at a time when the economy is very weak. We're seeing these tariffs, we're seeing the tensions, we're looking at the Federal Reserve not being able to move up or down in their interest rate, and we could be caught with a serious problem right here at this moment. So we're going to keep our eyes peeled, that's for sure. A final tranche of tariffs on remaining Chinese imports would hit more consumer goods. And you're looking at this right here. I mean, the 300 billion approximately, this is huge. Just to show you this, the red area is consumer. The potential here is obviously very disastrous for the consumer. Depends how far they go, depends how many products they want to do this on, depends on the percentages. We don't know until it's set in stone, but I just wanted to show you the progress here, looking at the round 1, round 2, round 3, and then of course the consumer gets hit really hard around that 4th round. So we'll see how that plays out. Looking at this next one, this is directly from the USTR. That's the United States Trade Representative's own website. You are getting the document. It will be in the link in the description under the sources. I have said this probably about 1,000 times. You have to scroll down in the description. You have to go down to where it says sources. There is a link there. If you click that link, you will then get the sources. It is not in the description itself. You need to scroll down. You need to go into the description of this and see where it says sources. Under there, you need to click on the link itself, and that link will open up a document where you can view all of the links for all of my 2,200 videos. That's it. Looking at this, you can see that what they plan on doing is in fact 25% on products of China with an annual trade value of approximately $300 billion. This is going to hit very hard. Okay, this is something that they're talking about. We'll see if they go about doing so, but both sides have this ready to go. I wanted you to see this specifically because you're going to be able to go through and actually scroll all the way through. I mean, there's a lot in here. Let me zoom out and you could just see literally a list of everything that they plan on increasing the tariffs on. I mean, it pretty much name anything. Look how far I'm scrolling. This is pages and pages and pages and pages. If you go all the way down, I mean, you're getting all kinds of things, electronics, you're getting basically anything you could imagine is in this list. That's what they're doing. The next round is huge. This is way bigger than the previous because in the other ones we were getting sort of the commodities, the steel and everything. Now we're looking at actual products. Now we're looking at things that hit the consumer directly, and this is going to impact them and they're going to be upset. And this is how it starts. You get the trade issues and that escalates into full-out confrontation. People are going to be unhappy. All of a sudden, if you see some tensions fly in, are they going to be happy at the next G20 when they go to supposedly sign this paperwork? This is, by the way, if you look at the markets, they're probably coming the green the next day just because they're saying, oh, don't worry, we'll have this figured out in a month. How many times do we have to hear that? It's been a year. We were told it was going to be 90 days. Then we were told by the end of the week it was going to be done. Then we were told it's a month from now. I don't believe it anymore. I just want to see the deal being signed and getting it done. This is going to hurt people. That's all I know. And there's another thing that's hurting people, and that is the replacing of the human workforce with robots. That's where we're going. All of this is really just temporary because in the grand scheme of things, humanity is going to be replaced by machinery, and there's not going to be anybody to give you a job because the robot works 24/7, doesn't need healthcare, doesn't take breaks, and doesn't complain. That's what they're going for. This happens to be one example. Amazon rolls out machines that pack orders and replace jobs. They're starting to implement this now. I don't know what's going to happen with it. Surely some jobs are definitely in a better shape to withstand this type of activity happening happening than other jobs, but if you look, they are doing so in every category. We're seeing it in the financial services, we're seeing it out in the construction field, we're noticing this in all different types, and of course, it's only a matter of time. It might take 20 years, it might take 40 years, who knows, depending on the industry, but they're going for it. That's what they're trying to accomplish. And so we'll see how long it takes, but ultimately, this is what's going to happen. In the end, it's those who are prepared in advance that will fare the best. That's all for this video. If you found it informative, then please give me a thumbs up. When you give me a like on this video, you're supporting me, you're supporting this channel and the truth, so I do appreciate that very much. If you want the financial education you weren't taught in school, these two books have everything you need from top to bottom, A to Z, the foundation, history, asset classes, all the details located, the link in the description. If you want the audiobook, that's available at themoneygps.com. The economy is not doing well and we need to face the music. If you want to know the details, click on this video and I will see you there.